Alrighty, good morning. Happy Monday to everybody, and welcome back. Hope everybody had a fantastic weekend to prepare for the week ahead. A little bit of a short week in the market, but as always, let's go ahead and get started with introductions. So my name is Jared. This is Engineering the Markets, and it is December 20th, 2021. So let's start off with a little recap from last week. We saw a lot of intraday volatility as the market was preparing for the FOMC minutes and the overall posture of the Fed moving into 2022. We saw a little bit more hawkish activity from Jerome Powell as there is a projected 3 rate hikes for next year, along with a reduction in some of the asset purchase program buying of particularly bond assets and MBS products. So market ultimately rallied off of this news. This was, of course, our sort of Wednesday rally, and it felt as if it was a bit of a relief rally. A lot of things rallying at the same time, more or less a correlated move in the market across different sectors and different asset classes. And of course, on the following day, we gapped higher, but ultimately could not hold that upside momentum as the market corrected back and ultimately has tested the lows of that Wednesday reaction. Now, as we come into our first day of the trading week, we find ourselves with a bit of a gap down in the overall market. The overnight futures contracts advertising that selling pressure into this morning's open. So let's start off with things a little bit more simply before we dig down further into where to focus this week. And we'll start off with what we normally do, which is our SPX or S&P 500 index expected move. Now, last week we had a reduction in the expected move. We came off of a relatively volatile expansion as volatility products were raging to the upside. And while the market reduced that expected move, it was elevated relative to prior trading. We were seeing anywhere from 50 to 60 points. Last week was a 79-point expected move. And amidst all of that volatility, especially the binary event on Wednesday, the market was able to actually test the lower bounds of this expected move. So from midpoint to low, we got a full expected move range, and that essentially was an indication that the option market did a fairly good job marking off where those risk parameters might be for the week. Now, as we enter a new week, understand two concepts. One, it is a relatively shorter week. We do not have trading activity on Friday. And two, after last week's volatility, if the market were essentially scaling back and seeing a lack of risk, we would like to see something like volatility once again decline. Essentially, the prep for the event and then the eventual de-escalation once the information is known. Both of these things are factors into this week's expected move, which at the moment is showing at approximately 88 points for the SPX. Now, one more note, last Friday was a quad witching Friday expiration. We saw a lot of rollover activity in both the futures contracts of the S&Ps, along with index options and index product options. So when we look at the close on Friday, we can ascertain that the market wanted to stabilize price here as we were getting the rollover event across the market as a whole. And as we look at today's initial gap down, it's a bit of a sign of maybe some additional volatility to come, especially since in a 4-day trading week, we have an expanded expected move compared to last week. So the market was essentially advertising that last week's volatility was priced at about 80 points. This week's volatility on a short week and with a lack of sort of that binary known risk, is a bit higher at 88 points. Now, as we know, the expected move is just a gauge of where some of the option risk is placed in the market, and it changes the condition of the market if we get breaches or expansions away from these areas. You can see larger hedging activity both to the upside and to the downside on breaches of expected move. And more importantly, if you get a test of the expected move, you want to see a more probabilistic event, which is the market retreating away from these areas and not leading into those conditional changes for the remainder of the week. So keep an eye out for these upper and lower bounds. We have the top side marked at 47.08 and the downside marked at about 45.32. Okay. As we look at our SPY and get a sense of where we are from a technical sense, we also want to note a few key characteristics over the past couple of weeks. One, ultimately, the SPY has pretty much gone little to nowhere amidst all of this volatility. Looks like I lost my screen. Calling on my admin to double check. So we're going to take a pause here as we try and recover the screen. It looks like the audio feed is still good, but obviously hard to discuss things without a visual. So one thing to note as we kind of get a glance at the gappers list today, a lot of relative strength in some biotech names. There's also a bit of continuation in some reopening names that did have a strong bounce recovery on Friday. Want to keep an eye out for stocks like Zoom, Peloton, some sort of oversold or conditionally downside stocks. Trying to think of a few names off the top of my head. Yeah, none are coming to the top of my head at the moment. But as I look at the down list, much heavier to the downside today, we have a lot of names that are familiar to us. Ones that are going to be more interesting are stocks that are selling off higher percentages, but they've already been in clear downtrends. More notably, some of the Bitcoin miners I see are near the top of the list. And what's interesting is those have been selling for quite a while. Therefore, it shows sort of a strong conviction to the downside. Those can often offer some of the largest bounces, but we do need signals for those. So I kind of want to see if stronger sectors, stronger stocks are selling, those are going to be coming off of sort of topping patterns. But stuff that's been selling, are we looking at that final wave down before a stronger bounce recovery just to set up a trade? So that might be something to watch today. Obviously, the market's been a bit more risk adverse, more defensive, more focused on defensive plays, and that has affected small caps. It has affected some of the sort of overbought areas of the market, and it has affected crypto. So that downside is not surprising to see this morning, but it may be coming to that final wave. And we'll take a look at those charts in just a moment. All right. So as I'm getting the screen back up, let's see if it populates everywhere. Okay, there we go. I think YouTube. No, YouTube's still having some trouble. Yeah, I might need some assistance. It looks like the chat room is okay, but YouTube is not with the screen share. Apologies, yo. Just don't want to. I don't want to push too far forward without everybody seeing the same screens. Yeah, I'm aware, Cliff. It's YouTube. That's the problem. So well, in the interest of time here, I'm kind of waiting to see if we can recover. But for YouTube, since you're looking at the gapper side of things, I may have to sort of default to the main chat's view of the market. So what I'll do is discuss things a little bit more directly. So for those on YouTube, I'll be looking at the SPY ETF, and I'll just sort of comment on the recent range we've been in. So when we look at the S&Ps, it's notable to me that we've had a relatively flat trading range over the past basically month at this point in time. A very clear high point that was set back in November 5th. This is sort of the highest print with a relative close. And every subsequent attempt to get over this range, this 470 area, has led to stronger downside. We initially had sort of a false breakout look that occurred at the all-time high in November 22nd. And then if you pull up a shorter time frame, you can actually see we made a pre-market high at 474.86. And that, of course, occurring after the FOMC meeting that high was, of course, rejected, and now we are trading near the relative lows of the entire range. One thing to consider is we've been to this area before. If we mark off things like previous all-time highs at the beginning of September, that area was back tested for the first time in the beginning of December with our test of the 50-period moving average. And as the market comes back into this range, it's a moment in time for the bulls to once again defend this upper range and find support near these price levels. The issue, of course, being that we have not necessarily seen the same sort of V bottoms that have been part of the uptrend during the initial rally into the 450 upper ranges. Usually these back tests of the 50 were sort of 1 to 2 day events. These marked relative lows and the market was able to sort of continue climbing. It feels as if the conditions of the market are a bit more challenging near this upper range as we see the back and forth price action. We obviously see larger rejections near the highs. And as we come into the 50 period for a second time, it's also worth noting that we are gapping below this price area. So as far as our dynamic support, we've actually gotten one possible bounce attempt off of this low. That, of course, was the early December bottom. But as the market is retesting this lower range, it's a moment in time for basically bulls to defend and bears to prove the strength of this downside move. Know that range-bound trading is often the more probabilistic event for the market. Markets often like to be in balance. Usually excess and directional-based trading is less characteristic of certain markets, as usually you will have moments of balance that lead to these larger trading ranges. So the market is simply giving us those upper and lower bounds. We want to keep aware that they continue to be in play. And if you are a shorter term trader, maybe in the time frame of a couple of weeks, you can look for these ranges to sort of set your relative risk in regards to going long and going short a market. Obviously, with the idea that we can have gap ups and gap downs through these areas, but it's all about the risk to reward in these ranges. Usually something like an option spread will kind of protect you from these more price-based gap changes. So that's pretty much all the comments on the SPY. I'll take a quick look at the Nasdaq. So I'm looking at the QQQ ETF. It's worth mentioning here that the Nasdaq did close below the 50-period moving average on Friday. This is the first close below the 50 period that we've seen in recent trading activity. And also worth noting that the Nasdaq has been attempting to defend this location for 5 intraday sessions. We've seen multiple bottoming tails near this particular moving average, but now we are seeing our first close on Friday's session. Short term, if we look at the Nasdaq, we can start to mark things like our most recent low, which of course was a bit of a lower bound test of the 50 period. That of course might be an area of interest if the market can recover today. But the Nasdaq overall has been a fairly structured index in regards to some of the best risk to reward for longs and shorts. And that has been our dominant uptrending channel, more clearly seen on something like a weekly time frame. So if you pull the QQQs into that weekly, you can see that while we are trying to defend our sort of daily moving averages, our sort of dominant bounce point for the stronger uptrends, just know that the Nasdaq's downside risk has often been this particular channel trend line or the channel-based support near the lows. If the market does continue to sell, depending on how it pulls into this trend line, we could be looking at something like some additional downside to about 370. At which point, of course, we simply want to look for that secondary confirmation that this support will hold. Just because we're at trend line doesn't necessarily mean it's going to support this time around. So when looking at the Nasdaq, there's a bit of concentrated risk inside of tech stocks, some of which we've seen on the intraday timeframes. If you pull up a stock like Apple, you know that while Apple was a relative leader in some of the bullish activity last week, we're seeing some topping activity. Larger volatile intraday ranges, obviously an all-time high that hasn't been tested as of yet. And our most recent attempt to expand above led to that strong downside on Thursday session. This, of course, affected most of the market, but seeing it at all-time highs may be indicative that the momentum is starting to wane. And we're simply looking for the next place to find where this pullback may be bought. Basically, stronger stocks that made new all-time highs often will pull back, and looking for the next round of buyers to carry the stock higher, whether it be a lower high on the weekly or simply a new all-time high in the future. So concentrated risk in stocks like Apple. But another key underlying that I wanted to highlight was a stock like Alphabet, ticker name GOOG. Unfortunately for YouTube, what I was going to do here was look at a composition of the S&Ps and just note that when you look at the market cap weighting of this particular ETF fund, ET fund, I should say, I shouldn't double use the word fund. Google is broken down into two stocks. We have GOOG, which is going to be our Class C type shares, and then GOOGL, which is our Class A shares. When you combine these two together, note that their market cap composition represents about 4% of the SPY, which puts it in the same category as a stock like Amazon. And as we all know, stocks like Amazon, stocks like Facebook and Tesla, they all have their own respective volatility, but the reason we pay attention to them is their larger market cap composition. When you look at a stock like Google, those market cap weights and the fact that combined it does represent more than a stock like Amazon puts into sense that if we see selling pressure in this name, and if that combined selling pressure leads to longer term pullback, something as simple as just a weekly pullback in the dominant uptrend, that can put a bit of an anchor or a downside weight in the market. So more or less the idea for the entire rest of the week is to pay attention to where some of the selling pressure exists in the market. It's not necessarily about being bullish or bearish in this context. It's about knowing that if tech is a dominant sell type sector, know that that's going to put a lot of pressure in the SPY. It restricts the amount of upside potential in the market. And even if we do find sort of a relative low, that low may have a lack of follow through in the short term until tech also finds its relative lows. Now, all that said, there is opportunity for the bull case across different parts of the market. A lot of people have been focusing more on defensive sectors, some of which do hold a lot of market cap in the S&Ps. The healthcare sector has been one of the stronger outperformers last week, making new all-time highs. And ultimately, since we have such an impulsive thrust to the upside, we may want to pay attention to where this pullback lands, as it might offer a secondary buying opportunity. Obviously, not necessarily worth chasing the price action too much up here, but simply looking to see, can we back test previous highs? Can we start to pull back to our 20 period and set up a daily uptrend, something that is much more sustainable as opposed to these impulsive moves? There we go. Sectors like utilities, same premise and same ideas. Noting that utilities are testing all-time highs for the first time. And worth noting that while we did have a strong push into these levels, we did ultimately fail to expand on that weekly session. So just kind of seeing where this money flow kind of falls down or falls through. Look for volume signals on the pullback. If this is an area to be bought, we would like to see that same pullback signal. And consumer staples. Once again, just showing where the strength has been in this market. If you are still bullish, it's worth noting that being bullish in the right sectors might be worth considering for this week. Looking for relative strength throughout the intraday sessions, and noting that just because a sector was strong, those pullbacks are more or less imminent, at which point we just need to wait for those pullbacks to be complete. If consumer staples continues to outperform, it's the same thesis. You want to see a pullback either to previous breakout levels, which of course would be sort of our range highs that we broke out from very cleanly. And now that we've expanded this total range, once again, just keeping things simple here, this expansion of range often will double. So it can mark targets. Ranges often like to expand by roughly 2 times. These expansions are very clean and clear if you see the signal to sell at your target, at which point the market may be ready for that initial pullback. And usually when you see that doubling of expansion, the pullback often will want to test where you've expanded from. Just going from low to high, that high sort of mid-range back testing your 50% retracement area. So all this put together, when you look at the market conditions, if we're losing some of our defensive sectors, they're simply pulling back. That puts a little bit of a bearish connotation in the market. And if you look at our inflationary sectors, the ones that often perform whenever bond yields are spiking, we've been seeing a bit of flattening inside of the bond assets, and that has been putting a bit of underlying pressure that is less correlative than what we've seen in the past. Financials with a harder sell-off on Friday. Once again, not trending, but also not necessarily losing our trend line supports. We're kind of near these areas, and what we want to see is this market going to hold and just sort of trickle back to the upside, or are we starting to see the initial signs of breakdown? The financial sector weakness, not helping the market to be bullish. Energy sector, same basic ideas. We just want to assume certain spots are targets to the downside. If we're done expanding higher, are we going to find support mid-level, 50%, 61.8? And what do we do to prepare for that while the market is correcting? And then, of course, last but not least, if we're losing tech at the highs, if tech starts to sell, you have to ask kind of those important questions for yourself. Where is the bullish activity occurring? And is it occurring at the time of my entry? Is the market giving me the signals that enough market cap dominance is helping the SPY and the Nasdaq move forward? At which point, is it occurring currently? Or is it about to occur with things lining up at the same time? Obviously, if you're more sector focused, more candidate stock focused, this has less impact, but just know that certain sectors of the market are aligned differently depending on what has been happening over the past couple of weeks. We've seen larger pullbacks from the highs, oversold conditions off the lows. That, of course, more or less affecting the communication sector. But everywhere there is lineup of different things coming from highs and lows at different times. This ideally is a bit of a challenge for traders, because you can have sessions where one sector with a lot of market cap propels a market forward. Other days where it propels a market down, and then that sort of bifurcation or that lack of clarity across different sectors occurring throughout. All right, y'all. Well, that's my time. This has been Engineering the Market. We'll talk more about some of this nuance as we push into this week. Know that it is a shortened week. Obviously, have your volatility and your hedging intact, and stay safe as we sort of end the rest of this trading year over the next couple of sessions. So trade safe. We'll talk more tomorrow.
Hey, good morning, everybody. How are we doing today?
Hey, good morning, Thor. How you doing, buddy?
Hey, awesome, Norm. How are you doing today, brother?
I'm good, man. I'm good, thanks. Hope you had a good weekend.
Yeah, my weekend was pretty nice. Had a pretty relaxing weekend for the most part. Actually got some work done on some future webinar stuff we got coming up here in the next year. So trying to get an early jump on that because we got a lot coming there. So, but otherwise,
Nice.
just a really good weekend. And yeah, how about
Very
you?
nice.
Anything notable this weekend? We looked at lights. We did a lot of driving around looking at lights. How about you guys?
No, family's been a little bit under the weather, so nothing special. Just hung out around the house, watched football.
Cool. Yeah. Yeah, I went to a football game yesterday. That was interesting. We were kind of hoping after our coach got canned that maybe the guys would be inspired to some miraculous greatness, but that did not happen. However, if you go by my Twitter, you will see me wearing Trevor Lawrence hair, which is pretty hilarious.
I saw that. I keep wondering why you're not wearing that on the pre-market show since you're doing it. Maybe
I
tomorrow
almost
we can
did.
finish.
I almost showed up this morning wearing it just to be silly, but I was like, I don't know. Maybe I need clearance on this one first. So Let's take a look real quick at the. Let's see here. Take a look at our gappers real quick. We'll take a look at market, and then we'll go over and we'll get a little feel for the pulse today. As you can see here on our gappers, we do have quite a bit popping up on the gappers already. As Jared kind of covered in engineering the markets, the SPY is gapping down a titch this morning. Now over on the SPY, you can see here, I actually have a weekly up today since it's the beginning of the next week. I thought it would be kind of fun to look at what we've been doing week per week versus day per day, at least the start, and then we'll get into the daily first. One thing that really pops out to me, y'all, and I don't know if it does to you, is notice how when we rose up into this level week by week, our volume was very low, and then big high volume selling off, and then 2 weeks ago, low volume rise, right? Last week, high volume sell, now gapping down on the weekly. So it's a very interesting profile here. It certainly shows, if I was looking to, to play like a double top or something like that, this is kind of the volume signature that I would be looking at. So could make the SPY a little bit interesting today. As you can see on the daily, finding ourselves gapping down a little bit as well. So let's pop over to the pulse real quick. Let's talk with our guy Norm and find out if there is anything notable coming up this week other than a short week. What you got, buddy?
We're down 1.2% on the SPY. We're off the lows, but still, we're down a lot a bit on the gap this morning and 1.6% on the Qs. They're leading the plunge, have been leading the recent plunge. So we'll keep an eye on it. I think it's a little overdone this morning. I'll see if we bounce. That's just my maybe wishful thinking. I don't know. Anyway, this morning, 10 a.m., leading economic indicators, what we got. Shortened week trading. This Friday, market's closed for Christmas. So see how it goes. We've got a lot of the reopening stuff, travel, oil, down, and then of course Joe Manchin came out on a weekend political program yesterday morning, said he's not going to vote for the big bill going through the Senate, so that kills that, at least for the time being. That's hitting a lot of these alternative energy stocks because there was a lot of the green stuff in that bill, so a lot of those down. Bitcoin down 2.3, so we see a lot of that too. So probably won't have a whole lot on individual names, but the COVID and that bill are what's leading a lot of this stuff. I think CCL had earnings this morning. I don't know if it's out yet. That's the only notable earnings that I saw this morning. I don't see that they have posted it yet, but maybe I'm missing it. So
I don't know. You had me at CCL, so let's.
I thought I might.
I'm always interested when that ticker comes up. I've had some really good days on it, but a lot of them were pre-pandemic when it first hit and everything started to sell off like crazy. I still owe CCL a cruise at some point in time once they really get things up and running in a way that I like. So let's go ahead, y'all, and let's pop over into our gappers. Our gappers up probably won't take us too long. But our gappers down might take a little bit longer. So I'm going to go ahead and let's clear this out a little bit here and get to it. Let's see. Starting off, we have BRG, Blue Rock Residential. They are gapped up, but showing not a whole lot of volume afterwards. But big accumulation yesterday, then a big gap. Looks interesting. Float's only 26 mil. And we do have shares for short on IB. So interesting. Maybe something to put on the lower float.
It's a REIT. I straight up do not trade REITs. They usually trade like garbage, but you can always have an outlier.
Yeah, we'll see if this one fails. I normally don't trade these either, but I try and keep a little variety. I don't know. ITCI, intracellular therapies.
No, that
negative?
will kill you.
Norm gives a negative.
The spread is it trades extremely thin. Look at the chart, and the spread is awful. So run. That'll kill you.
Oh, yeah, look at this thing. Norm's not wrong here. 48-cent spread currently, which is a pretty aggressive on a $46 stock. I mean, that's pretty not great. OCGN, haven't seen this one for a little while, and I can see why. Daily wise, it's been trading very small, narrow range candles, so probably hasn't provided a lot of opportunities. Looks kind of algo this morning. Not too interesting. I have a feeling we're gonna have a lot more things to look at. So, Invax moving around. These are probably gonna play today a little bit because we've got COVID news and continued COVID news. So the vaccines have been playing a bit. So we can certainly throw Invax on.
I think they've got some EU news too on their COVID vaccine, so it's
Right
got
on.
its own catalyst as well.
Cool. I like that. So it's sitting above R4 in the pivot line, so it might be trying to break out today if this news is strong enough. So we'll definitely come back and take a look at that. No surprise, also Mrna on here. I think Mrna had a testing that came back that showed a really huge antibody response to omnivirus or whatever. So they're getting a little bit of a pop now because of that, I bet. Is that what we got going on there? Is that?
Well, you kind of combined things there. I guess they came out and said that their booster increases antibodies 37-fold. So yeah, and it appears to be okay and help against the Omicron. So
cool. All right, that's something to keep an eye on. BFRI. Wow, that is an ugly daily chart. So I don't know if you've ever heard of topping tails but this is what they look like. So I don't, but it never really drops. So this looks like a horrible stock to trade. Floats 3 million, so a little
huge
low,
short flow. Well, as of the last reporting, at least per FinViz, it doesn't have it recorded on TI for whatever reason, but.
Yeah, a little sketchy on BFRI. At least I can put it down in the crazy category if we want to have fun. The low float category, and then Zoom here. Zoom on the gappers up. Wow, interesting daily chart on Zoom. Had quite the buy up on the prior session, coming away from this high value area at S3. Now today finding itself gapped up. This is one of those stocks that can tend to go up when COVID stuff comes out. People start thinking staying home. So, these teleconference stocks tend to move. Anything notable on Zoom?
I mean, just what you mentioned.
Yeah. Cool. So Zoom might be worth keeping an eye on for a play. I think I actually might look at that if it does something here. We also come back to the 23rd, had this really high buy off. And one thing I really like to kind of do when you have a day where everything's gapping down, I kind of like looking at the gap up, because if it's going against the market on a day like today, then it's probably got something going on. All right, so I'm going to hop over into the gappers down, and I'm going to try and smash through these a little bit, y'all. So what I'm going to do is, Norm, kind of like we talked about, if there's something notable that you really think's good, I'll have you throw in. Otherwise, I'll just start smashing through some of these because this is huge, and I know we got to make a little space for our doctor coming up pretty soon here with the wisdom. So I'll get through this, and then we can get to some announcements in the doc. All right, we got Bluebird Bio, pre-market, could be better. Big gap down after a big buy-up day yesterday. Very institutional, decent float. I don't know. Put it down here, maybe in the possibles, but I'm not a huge fan.
News. They were halted for a while this morning. They started trading again 13 minutes ago. So,
okay. Yeah. So, it's scary. All right, so we'll throw them down there. If anyone really wants it, I can review it. Hut Mining's on here. How did let's see here. Let's go Hut, and then we'll go down here and we'll get our hashtag BTC in here. How's our Bitcoin doing today? Bitcoin
2.5%.
Yikes! Bitcoin going lower and lower. So that explains Hut having some trouble here as well. So if you want to trade Bitcoin, but you don't have access or the desire or the bank, these are kind of some fun places where you can come, almost like an ETF. You can trade these guys and get a little bit of the fun. Hut, though, has not offered the world's best trading opportunities lately, so just keep that in mind. Plug Power in the house. You mentioned EV stuff because of the bill. Plug Power moving down in the pre-market, looking below S4, so definitely in a breakdown territory, and we've been building volume to the downside, so that's certainly interesting. We can keep Plug on the list for sure for something to review. Let's get some. I need to get better at this, like Carlos. YMM. Don't know if I've ever heard of this one before. Full Truck Alliance Co. Really gapping down. $9 stock. Big float. Big spread for a $9 stock, but it is shortable. Daily chart. I mean, it's certainly consistently headed down. But I don't like how low the price is with how high it used to be. But if you're going to look to play a bottom or something, maybe. Pre-market volume stinks. Let's check some more stuff out. Elsid in the house. Yeah, I love playing this stock. This stock could be a little tricky to trade because it moves a little bit further than you would expect when it makes its transitions, and it can pull back a little heavy, so you got to play it. A little loose, but it can be a very fun stock, and it can trend all day once it gets moving. Let's see, had a big value accumulation, big buy right here on the 17th on LSID. I like that. If we can hold, and if the market has a bounce today, like Norm was talking about optimistically, maybe, kind of look at what you think's going to happen and think the opposite, and that tends to work out quite well. But you can see here, we kind of had a buy up yesterday. If the market bounces, LSID could be a spot to look maybe. Mrna up here playing in the Bitcoin game. I assume that'll be the same. Let's see here. Yeah, all the way down near the breakdown range. I like Mrna better than HUT if you're going to look for a play. Still no pre-market volume, and that needs to change. But I do like that Mrna's daily looks a little bit better, and a really nice breakdown under VWAP. This one's in a really nice pivot area. We could either get an extreme reversal here or a breakdown, so that we could definitely make some good decisions on that one. FCell, alternative energy as well. We see ourselves also continuing to build volume to the downside, similar to Plug. So we'll have to keep an eye on that, but we are kind of below S4 now, which we could get a bit of a pullback to test. FCell getting into the really low, $6 range is getting pretty inexpensive, especially for a 350 million float stock. So that'll be interesting. No pre-market volume as of yet, though. Skills coming in. High volume here, consolidating for the past few days, which is interesting. Could provide something if there's a bounce, but again, low price, low volume in the pre-market. All right, let's hit some cruise lines. Norm said CCL earlier, and I've just been dying to get into it. Let's see here. Actually, you know what? Let's do this. I'm going to take a break for a minute, and let's pop over, and I can see we've got Kreda is in queue. Norm, do you want to go straight into Kreda, or do you want to do announcements and then Kreda?
We can do Kreda first. She's here. Let's not make her wait. That's fine.
All right, I'm going to go ahead and get her queued up here in just a second here. All right.
Good morning, Kreda. How are you today?
Morning, Norman. Great, thanks. Can you hear me okay?
Yeah, I can hear you fine. I apologize. No camera this morning. We've had some technical issues with it, so I should have it back next week. But you're going to talk about wrapping up and analyzing your 2021 to start off with a better 2022. So take it away.
Exactly. So this is the time of year when everyone's starting to recap how your trading performance went in 2021 and how you're actually going to set yourself up for success in 2022. So I just want to talk you through a couple of practical steps that you can take to do a really effective review, because obviously the of your review is going to determine how well you set yourself up for success in 2022. So a few practical steps that you can take to conduct a really good review of this year and also then to plan for next year. So a pretty practical talk, and I'm going to recap goal setting in more detail on Wednesday. So today I'll just talk about the framework. So in terms of reflecting on the progress that you've made in 2021, it's really important to actually give yourself credit for the progress that you've made, even if it is that you haven't necessarily hit your outcome goals for the year. So maybe you had a P&L target that you wanted to hit for the whole year, or an income target, revenue, whatever. And if you haven't hit that, it's still really important to look back on the progress that you did make, and not just from a P&L perspective, but also in terms of the effort that you put in. So maybe you stuck to watching X amount of webinars every month to really improve your trading performance, and that should count as progress. So yes, of course, you're going to look at your P&L targets and have you hit them, but you do want to give yourself credit for progress made in terms of effort too. And the reason why you want to do that is because it builds your motivation and confidence. So if you're only ever measuring yourself against your profit targets for the year, and if you haven't hit them, then you're going to feel like you're coming up short. And that might be a very unrealistic perspective on how far you've come this year. So one way to do that in a sort of systematic way is to look at the effort that you've put in. So all of the actions that you took that were directed towards improving your trading performance, and then looking at the P&L targets. So map the two of those pieces of your performance and really reflect on what you did well, and try and put the emphasis more on what you did well than what went wrong, because that will actually put you in the right mind frame to hit the ground running in 2022 and to keep your motivation and confidence high going into the year. And then you also, of course, want to look at the areas for improvement. And in terms of those areas, it's helpful if you can keep it simple. So yes, identify everything that needs to be improved or where you fell short against your targets, both in terms of a process and an outcome perspective. But once you've done that, try and consolidate it down into maybe the 2 or 3 absolutely fundamental areas that you need to improve on in order to lift your overall performance in 2022. And if people are familiar with the BBT webinars and the Mental Edge series, this might be going back to your performance profile and going through that process again and really identifying, okay, where are the key things now that I need to improve on in order to lift my whole trading performance in 2022. And as you're reflecting back on these areas to improve, it's really helpful if you can quantify the impact that they had on your trading. So for example, if it was that you made good profits, but you kept giving it back. So every so often you had a red day and it was a really substantial red day where you ignored your limits and all of that. And maybe you took, 10 steps backwards, even though you'd been making profit for 2 weeks. And let's say that happened continuously throughout 2021. Well, then try and quantify exactly how much it cost you. And what I mean by that is, if you can map, so looking back on all your trading numbers, your data, your statistics, and actually track what would have happened had you been able to eradicate those red days. So from the psychology perspective, if you could have completely removed that behavior of ignoring your daily loss limits on those particular red days, then what profit would you have been able to hold on to? So you're trying to quantify the impact of these challenges for yourself. And if you've got maybe, say there's 5 things that you feel I really need to improve on all of these things, then go through that process with each of the 5 challenges and see which one is costing you the most money. So we want to get really practical around this. And once you figure that out, then you have a target or a benchmark to work from for 2022. So even if you are trying to, let's run with that example. So if you want to remove those red days from your trading, in terms of red days where you're actually causing them yourself, where you're ignoring your stops and your loss limits, then you have a benchmark to work from. So in January 2022, on average each month how much this was costing you. And so you're aiming to reduce that even in January. So rather than trying to expect to change the whole behavior from the outset of the year, you have a target that you can work backwards from. So hopefully that makes sense to people. But the idea is that you want to get very specific, very concrete and measurable when you're talking about areas for improvement. Then the third point is to review the effectiveness of your goal setting in 2021. So maybe you set goals at the outset of the year and maybe you haven't hit them. And if you have hit them, some of this advice maybe not doesn't apply. So brilliant if you have hit them. But if people haven't, then some aspects of not hitting your goals might be down to performance issues. Let's say that you weren't warming up properly for your trading sessions, maybe you weren't reviewing your trades, whatever it was. So something was causing you not to hit your goals. That's one piece of it. But the other piece of it is that possibly your goals were too high or ineffective. So maybe your expectations were unrealistic in terms of the time frame that you were going to hit your goals in, or maybe your targets around your P&L for the month was unrealistic because you wanted to make too much too quickly, or maybe you expected to become consistently profitable in 4 months or something like that. So actually assess the quality of your goal setting and be aware that if you haven't hit your goals for the year, there could be an element of having unrealistic expectations, expecting yourself to progress in too short a time frame, so not giving yourself enough bandwidth and time to actually meet your goals. So maybe you need to extend the time frame around your goals. So actually review the quality of the goals that you set for yourself in 2021. And then that brings me to point 4, which is our last point. So this is about effectively planning for 2022. So setting effective goals. And again, if people are familiar with the Mental Edge, the webinars and that whole series, we're talking about setting not just P&L based goals, but also performance and process goals. And I'm going to recap what they are on Wednesday in a bit more detail, so give them their own slot. But you want to set effective goals, so using that process. And then you also want to make sure that you're setting a very realistic time frame to achieve those goals in. So not expecting that you're going to substantially increase your performance by 50% by February, so actually giving yourself that time to improve. And then you also want to build up your performance. So if you've set a profit target for 2022 of X amount, then you possibly wouldn't be breaking that down into just, okay, I'll divide that by 12 and say that I need to make that each month. You might actually be building up to it. So in January, you're expecting a lower profit target than February, and you're systematically building it up piece by piece throughout the year. And again, that helps you to set more realistic goals and to set goals that will actually support you in making progress, as opposed to being so challenging that they undermine you from the very outset. And in that way, you can build your confidence, your motivation, it helps you to keep the growth mindset as you're progressing through the year, and it makes you more likely to actually achieve all of your goals for 2022. So that's my very quick and snappy process for doing an effective review of 2021 and setting goals for 2022.
I love it, Greta. It is the perfect time to start thinking about next year and planning. So thank you very much. Glad to see you're feeling better as well. So we'll see you on Wednesday. Have a great day.
Thanks, Norm. See you then.
Well, that was awesome. I mean, the amount of information she gives us in like a couple of minutes is like staggering. I've been really enjoying that we've been reposting these back to YouTube later so that it gives us kind of an opportunity to review those. But I mean, it's just like such amazing information that we're getting from her there. So, Norm, why don't I go ahead and roll up some community events here? We can knock that out, and then I'll get heavy into the gappers. How's that sound? I might have lost you. Well, it seems I have lost Norm's microphone, at least for a moment. So we'll see what's going on there. Well, in the meantime...
I'm here.
There you are.
Sorry, I was muted. I thought I unmuted.
Good deal.
I muted on accident.
Hey, fair
accident.
enough.
All right.
I always assume first it's me.
Yeah, well, that's fair enough. I do the same thing. All right. So quick weekly rundown since it's Monday. On Mondays, we've got Brian's swing trade discussion at 2:30. Then onboarding and technology with Carlos and Kyle beginning at 8, and then at the technology at 9. Tuesdays and Thursdays at noon, you've got Eamon's trade reviews. Success webinars are usually at 8 p.m. on Tuesdays. Sometimes those change, so always keep that in mind. Wednesday, psychology, same thing, almost always at 8. But we have Kreta this week, for instance, and she's in Europe. In her time zone, we do those a little earlier at 5 p.m. Eastern. Thursdays, mentoring, you've got Andrew at 11 a.m. or whoever may be covering him if he's traveling. You've got Ed at 4:30 and Thor at 8. And then Jared's crypto session Friday, 11 a.m. All right. You've got Eamon's trend trading webinar. That is a special time tomorrow night as well, 5 p.m. And then next week, Artie's going to be talking about hedging strategies for major market conditions. That'll be at 8 p.m. the normal time next Tuesday. Psychology, as I mentioned, you have Created at 5 on Wednesday, talking about taking the pain out of trading part 2, assessing impact, FOMO, and overtrading. And then next week, kind of just a relaxed one. It's going to be a Zoom meetup because the holiday and everything else probably won't be a huge amount of participation. So Mike's going to be doing that from the Dominican Republic, hopefully with some nice fruity drink.
Nice.
All right, just a reminder, all the Super Chat revenues going to Shriner Children's Hospital this month. And don't forget about our web-based free replay simulator, trading simulator at stocktradingsimulator.com. While you're there, sign up for the homework assignments that are emailed out a couple times a week down on the bottom right-hand side from Eamon and Simon. All right, if you're watching on YouTube and haven't been in the room, you'd like to do so, you can go to bearbulltraders.com, scroll about halfway down the page. You will find that Test Drive Now button. Click there, fill it out. Use the promo code PREMARKET24. It'll get you a discount off that. It's 7 calendar days, 5 trading days. It is a one-time payment. It does not recur. It does not sign you up for anything else. It just cancels after that 1 week. And keep in mind, guys, there are some holidays in there, so you'll miss a day or so depending on when you sign up for it. And then if you want to take advantage of our current promotion, use the promo code HOLIDAYS40 to get 40% off the annual Elite membership, and that includes 1 month of DAS Simulator.
Nice, awesome. Thank you, Norm, for walking us through all of that. Some great stuff in there. For anybody out there who is really thinking about coming by and checking out the BBT family, it's definitely worth doing and coming by and checking it out. Also, for anyone else who didn't know, I don't know if it's still available today, but all day yesterday, Andrew's book, How to Day Trade for a Living, was actually available to download for free on Amazon Kindle. So if you didn't have an opportunity, you may want to check that out. Even if you already have a copy, you may want to just go grab a copy just to have it on your device. Might as well grab it while it's free, just for the download.
And it's updated for 2022. That's why it was no charge.
And the updated version at that. So just saying out there, people. I put it up on my Twitter. I was like, it's free, people. Go get it. So all right, let's get into this watch list here, and let's get some stuff together. So first off, back to the SPY real quick. SPY been super flat. Since we got our morning gap down here, we have done very little since, so that puts us in a very choppy posture. Be very interesting to see what happens here if the SPY decides to bounce or not. Looks like the top of our list is pretty much the same, so I'm going to start here with grab holdings. Do not enjoy the pre-market volume, do not like the daily, so I'm going to go ahead and move on.
Yeah, that's trash.
Billy, horrible pre-market volume. I have seen, this is a Chinese stock, Billy, right? So I have seen this one trade okay in the daytime, but this pre-market daily doesn't look great. I think we have other options. If someone wants that, put it into the chat and I'll review it. Robinhood Markets, look at these guys. Gapping down here, been trading really kind of choppy the past couple of days. Not really sure if I don't like the pre-market volume on this. Anything notable on these guys on why they're on here? Oh, are they earnings?
No, they haven't had earnings. They gotta. No, I'm not seeing anything fresh or specific this morning. So
it's gabbing down. All right. Yeah, I don't know. I've never traded them, so I'm almost interested just because I've never traded them. But I don't think I'm going to.
Down with the rest of the crypto stuff.
I don't think today's the day I'm going to start. Let's see. Riot on with our Bitcoin is playing today. Gap down, horrible pre-market action. So I'll leave that one to you guys if you decide you want to play it after things get rocking and rolling. NCLH, cruise line. Drop down here. This is Norwegian. Pre-market action is not looking great, and NCLH can get nice pre-market action when it's trading. Really decent, really big float on this one. Really not a very large short float on it, and it's about half held by institutions and is shortable. So this can be a good stock to play, but most of its days, and I've talked about this a lot in the past week, a lot of its days are these very narrow days. So you really got to try and, if you end up not catching this one, it's really easy to chop yourself out on these trying to get a good move on them, because the majority of the days it doesn't give them. So maybe some better options out there, but we'll come back and we'll take a look at NCLH and maybe it's a friend CCL if we get to it. Oxy was on here. I know, Norm, you had mentioned oil and some other plays kind of hitting today. Very interesting high volume and decision candle prior session. Today gapping down. So that'll be very interesting to watch.
Oil's down almost 5% on demand concerns over Omicron.
All right. So that's definitely a fair catalyst. We'll throw Oxy on there for sure. NKLA, I haven't seen them for a while, and this is why. NKLA, let's see, still shortable, 2-cent spread, $9 stock or $9.60 stock, big float, decent short float actually, getting up near like 15%. So volume look good. Pre-market looks great
when you push them down a hill.
Yeah, pre-market's not great. One thing I'm actually noticing a lot is we've got a lot on the gapper, but not a lot with a good pre-market. So it looks like most of this stuff, like Norm was saying, is just kind of peeling with the market.
I'll tell you, it's funny. Usually we can find a lot of great stuff to trade when we've got a gappers this size, and it's just not that fantastic this morning. So.
Yeah, I mean, such a big gapper. RIVN, this one has had a couple of okay trading days, but again, most days it doesn't really trade that well. Big volume yesterday. Maybe see if it can hold this area. This one actually has some interest in me just because it's where it's holding. If this could push back up and move towards 100, like if the market bounces, maybe a good play out of RIVN. Super valuable company, apparently. We'll come back to that one. Let's see, TLRY. I personally do not like trading this stock at all. I know some people have had some luck with it, but I really don't like it. I think it normally trades poorly. Pre-market kind of lines up with that. But if you're into it, let me know, and I will. I'll add it into the. My goodness, look at this list. Let's see, Fubo. Pre-market's not great. Daily. Daily not bad. I like the bounce of S3 with the volume. I'll put Fubo on here. We'll come back and take a look at it in a little bit, in a second. Xpev for me has been like a really poor stock to trade lately. It used to be an amazing stock to trade, like through these regions here. It had these really big days, but lately it's been getting a little bit more challenging because it's been having more narrow days. Sitting right at VWAP though. Near a breakdown area, so that's really interesting. I may leave this on here, but pre-market volume again missing. What's a DD? Moving on. CCL, ooh, do not like the pre-market on CCL, so unfortunately our good buddy is not there yet. Roblox.
CCL will improve.
Yeah, they got earnings coming, right?
Yeah, they're supposed to have earnings this morning, so it's actually getting a little late for those to come out. I'm surprised. I don't know.
Well, I'm waiting.
Wrong or what? But yeah,
we're waiting, buddy. I'll leave you on here. Come on, wake up. We need you here. We need something with some catalyst. Let's see. Plantier, PLTR, volume again bland. This one just finds itself kind of mid-range here. I'm not a huge fan of this one. Call it out if you guys want me to review it further. Roblox pre-market action, also bland. Daily action, pretty bland. But I do like that we kind of had this indecision candle with the good buy-up and then kind of building volume in this range here. So, maybe something on Roblox. My son was just playing that yesterday. DKNG. I haven't seen this one for a while. Really sporadic pre-market volume. A little bit of a buy up yesterday off of an extreme level, which that's kind of fun. I might actually throw that on there. Nothing with pre-market volume though. That's really moving. Wow, when Nvidia has one of the better looking candle structures you're having in the pre-market, you're having a rough morning. Let's see here. Big press down on Nvidia finds itself gap down this morning. Stock's a little on the high side for me to play, but might need to explore it since there's not a lot there. I do like some of the pre-market look, but not much. Let's see.
AMC's ramping, Thor.
AMC. Let's pop over to AMC. All right, AMC. All right, so AMC had a really big buy up yesterday, or sorry, prior session. Today already finds itself moving towards those highs, and it's got some volume coming with it. Look at this nice big volume initiation here. That's certainly going to be really interesting to look at. AMC can, it's awake, so this can certainly make the list today. The question is going to be, what are we going to get out of this thing? We're coming into some breakdown areas off of the prior range. Are we going to try and break back up? If so, I mean, we're right at kind of VWAP and value. Maybe this is where the buyers start coming in to really try and squeeze this thing back up. Should be really interesting. So yeah, good spot there, Norm. So we'll keep AMC. We'll move AMC up to the top.
I think Spider-Man, the Spider-Man movie that came out over the weekend was, I think, their third highest opening weekend of all time.
Nice.
A bunch of people, I guess, said screw COVID and went to the movies.
Absolutely. You know, I thought that because when I drove by a theater yesterday, the parking lot was full. And I thought to myself, wow, everyone's actually like hitting the theaters. I'm like, cool. But, you know, I had a buddy of mine who went and saw that movie, and he said it was actually really well done. My favorite Marvel character is actually Doctor Strange. So I heard that Doctor Strange was also in that one. So it might be one I need to go catch as well. So that looks really cool. All right, fun. All right, that's a catalyst. I can live with that. Oh, Delta Airlines trying to nose its way in here. Yeah, pre-market looks not great, but starting to gap down with the market a bit. Looks like we've got a few airlines on here, and they're all looking very similar. So except for United. United actually has a little bit different of a posture. It actually already gapped, and it's already buying up this morning, but pre-market volume horrible. So we'll have to come back to that. Let's see, buddy. What do we got? Uber here? Pre-market volume, not great. Yesterday's candle, very interesting. Kind of a solid buy-up candle. Now back down. Maybe we hold this buy. X. Nah. Space. This Virgin Galactic. Whenever I see space, my first thought is always SpaceX, and I get really excited. Then I go, oh, wait, no, it's Virgin Galactic. Space finds itself gapping down a little bit. We did have a bit of a buy up sitting near this support range here with value here. So it'll be interesting to see what Space does today. But it looks like it's just kind of gapping down with everything else. GM gapping a titch. Interesting volume yesterday on GM. BA near S3. That might be an opportunity. I'll throw BA on a... Look at the size of my secondary list. Holy moly. And last but least, GGPI. Yeah, we'll just leave it there. All right, so let's do this. I'm going to go ahead and go out to the room. Now that you guys see this massive list that we have, why don't you guys help me clean this thing up a little bit? Are there any tickers out there that are really resonating with you guys, that y'all are really, really enjoying? That are just popping out, that you just gotta have, especially stuff we haven't seen yet. I agree. I was gonna pull NEO up and check that out. I typed NO. I meant to type NIO. All right, let's get rid of that. NEO. All right, we got NEO on there. How about out to YouTube? Throw me a couple too. All right, I see. I got AMD, PFE, and Apple. I love it. We get this massive gappers, and then we'll end up with like 10 stocks. None of them are on it. I love it. All right, let's make some space. What a list, huh? We got to get this down to like 4 or 5 stocks, people.
It's amazingly bad this morning.
All right. Neo's a meh for Jason. So right now, my only list right now is AMC. It's the only thing that's moving that I'm actually interested in right now. So let's start kicking through here. The VAX plays are certainly interesting. PFE, I actually like PFE. I think I'm going to take a look at this one today. One thing I noticed on PFE, big push on medium level volume, big indecision on high volume, now pushing towards this extended range on low volume again. This one could roll over if the could roll over, especially if the market bounces. Actually, I bet this one could go the other direction. So that's interesting. Invax is gapping. We know that. Let's go down. Where's Neo? So we have Neo here. Neo for me, honestly, has been like a no trader for me for the past maybe like month. It had one good session or 2 or 3 sessions here where it actually like made a good move. But other than that, every single day are just these little $1.50, just really tiny range days. Which has made it just incredibly difficult to trade. If you're going to trade Neo, please make sure not to trade near value. And what I mean is if you're looking at Neo, so for instance, right now, if you're looking at this daily, look at the prior day and just kind of come near the middle of the prior day, right? And you can see around $29. You don't want to trade anywhere between $29.50 and like $28.50 because basically what's going to happen is you're going to be just ranged in. So you're going to need to let Neo actually rally out towards $30.50 and play the rejection down, or let it sell and play the bounce off of 28. But any trades on Neo in the middle are just going to be riddled with chops. So you got to be careful with that. Neo is going to be a no play for me today. Unless something really happens. So Apple threw big volume downside yesterday, and it started to lose R3. I would love to see a back test of Apple back to like 170 and then a sell on it if the market rolls. 168.50 building sellers, 169.11 building sellers, 170 building sellers. So right now I'm actually reading Apple in a bullish posture. So keep that in mind. I actually think Apple may squeeze today, especially if the market bounces. Apple will go on to my primary list because I like Apple. It trades well almost every day, so it's certainly worth hanging on to. AMD bouncing off of this low S4 support area that it's been attempting to hold off of for a few days. Just naturally looking at this thing, level 2 looks very balanced right now, so I'm not seeing a specific bias in one direction, but we are opening low in the range, which is good. So which means that you're going to either look for a breakdown or you could look for an extreme reversal if the market bounces on AMD. We need more volume in the pre-market, though, for this to hit the primary. So for right now, AMD is going to stay on secondary, but I do like that. Let's see. There was a Zoom. Has gone.
CCL's perking up.
There, here we go. CCL, where's my buddy? Here we go. All right.
I think they just dropped earnings.
All right, CCL on the list now. We needed the volume to come in before I could officially add it to the list, but
yeah. I want to mention SPY at 380. That is a critical level. So it is dropped off of that. It's tested it several times this morning. How it reacts there is going to, I think, determine, or not SPY, excuse me, Qs at 380 are going to be a critical indication of how this day goes.
All right, and that correlates highly with tech, right? So let's see here, or at least TQs. So yeah, exactly. So and you can see that coming back here, right? We're talking about we're at near the bottom of all these various where we've bought up almost every time we've bought up right off of this level. So if we start to buy up and then we roll and fail, that's definitely going to be a real big indication for sure. So right now I'm down to probably what will be my watch list, which will probably be AMC, Apple, CCL, and then I will actually probably watch SPY. And maybe play like SPXL or something like that as a leveraged ETF, so I can play SPY. We'll see how that goes. What else we got out there? Let's do a couple of more stocks out there, and then I'll go through the watch lists from the which we have most of our watch lists already coming in from our moderators. So is there anything else that you guys want to see before I hit those lists, and then we'll call it a pre-market. All right, let's do PFE. PFE. So yeah, PFE we looked at a minute ago. So this is kind of what I was talking about. So PFE I find interesting because of the big indecision candle it had on high volume in this extended range here. And now it's pushing on rather low volume this morning. If it sets up right, I think PFE actually reads as a potential short here if it fails this breakout. So what you're going to be watching on PFE, for me at least, is I would be watching these highs. See how we kind of have the high of the previous day's high, for instance, right? You're going to be wanting to watch those areas between here and here to see if we sell heavy there. And if we do, look for it to roll over and then sell back down and give up some of this profit it's had for a few days. And that may well happen because Mrna has come out with some really good news in regards to their booster shot having a high efficacy rate on the new variant, right? So that's going to really help Mrna pop out. But that kind of good news there is naturally going to put pressure on any competitor, even a competitor that's doing well. But PFE has been straight rally for quite a while now. So this might be a little bit of a moment for this to give a little bit back and come back down as maybe people try and rotate into Mrna expecting it to perform better. Who knows? All right. So, yeah, that should do it for me. Let's go ahead and hit these moderators lists. Coming in hot off the presses was Eamon, and his list was in at 8:39 a.m., people. He is looking at Piton, which is often a good COVID play, PFE. And then for potential shorts, he's watching Disney and CCL. Speaking my language, Eamon, I'll be on CCL with you, brother. John H. is Mr. Captain Obvious this morning, and he's coming in with NVAX, Mrna, ZM, Piton. He said call him that, by the way. IPOs, none for Peter. SPACs, NVACU. It should be a quiet week for IPOs. Very little of that going on this week. We have Mrna being watched by Jared along with Zoom, AMC. His secondary is Piton and Futu. Haha, almost fell into the Carlos trap. Peter is watching Apple, AMD, and AMC. I feel like I could have told you that without looking. Secondary, LCID, and CCL. Come on, CCL, this is happening today. Dima bringing in Apple, AMD, Piton, and Zoom. I'm going to have to look at Piton now. Tiffany, I mean, it's Eamon and now Dima. I feel like I'm missing out on something. And then we have Tiffany, Mrna, Apple, AMC, and our own Prophet of Profit, Brian Pesum, CCL, TNA, TZA, NVIDIA, and Piton. All right, everybody. Those are our watch lists this morning. I really appreciate everybody coming out and hanging it with the pre-market show for us. I hope you all enjoyed the incredible insights of Creda. If you did enjoy the show and Creda as well, please take a moment, throw a like, subscribe to the channel, and ring that bell so we can keep keep as much of this content coming to you guys as possible. Norm, great hanging out with you this morning, brother. Hope you had a good one, and we'll see you on later.
You got it. Take care. Q's right at that 380, just busting above, so we'll see if it holds.
All right, it's going to be a good time today. I've got good feels. Let's do it. Keep it green, folks.